The stock market's worst fears have been realized, with the Finance Minister Nirmala Sitharaman hiking capital gains tax on both short-term and long-term profits from certain financial assets. Sensex and Nifty, which survived and even thrived after the June 4 election result shocker, were staring at yet another uncomfortable moment, the tax burden imposed in the union budget. As the Finance Minister dropped the tax bombshell, Sensex fell over 1200 points, only to focus back on the budget's focus on both growth and fiscal responsibility. Analysts say that higher capital gains could result in market valuations consolidating at current levels, with a rotation towards a more balanced sectoral performance. Now let's take a look at the key takeaways for stock market investors from the budget 2024. Number 1. Short-term capital gains tax hike. In the budget, Sitharaman has increased short-term gains on certain financial assets to 20% from 15% at present. Number 2. Hike in LTCG. In the budget, long-term capital gains or LTCG on all financial and non-financial assets has been increased to 12.5% from 10%. This certainly increases the hurdle rate for investors in financial assets, and hence there is a negative sentiment. Markets had gone up over the last few months, hence some cooling off is expected before the focus shifts back to corporate earnings and strength of the economy, said Harish Krishnan of Aditya Birla Sun Life AMC. Also, listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all other non-financial assets will have to be held for at least 2 years to be classified as long-term. Additionally, unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of the holding period, will attract capital gains tax at applicable rates. Number 3. Increase in exemption. Budget has proposed to increase the limit of exemption of capital gains on financial assets to Rs 1.25 lakh per year from Rs 1 lakh per year. Number 4. STT hike on F&O. To discourage retail traders from punting household savings into derivative trading, which was called gambling in the economic survey, Sitharaman has raised securities transaction tax or STT in the F&O segment in this budget. It is proposed to increase the rate of STT on the sale of an option in securities from 0.0625% to 0.1% of the option premium, and on the sale of a futures in securities from 0.0125% to 0.02% of the price at which such futures are traded, Sitharaman said. The changes come into effect from 1st October 2024, the same day when exchange turnover charges will be reduced. Ashish Nanda of Kotak Securities said that the net impact of this will be largely net neutral for traders. STT on options will increase by Rs 3.75 per Rs 10,000 round-trip premium turnover, while exchange turnover charges should reduce by approximately Rs 3.50 to Rs 4, Nanda said. Lastly, at number 5, we have buyback tax. Sitharaman has proposed to tax income received on the buyback of shares in the hands of the recipient. This will potentially bring parity between tax implications on declaring dividends and buyback. Historically, shareholders have enjoyed the benefits of a lower tax implication on buyback, with savings of 12% approximately on distribution of profits by companies in form of buyback versus dividend. This benefit may no longer be available to shareholders. However, the cost of acquisition of shares bought back shall be allowed as capital loss to shareholders against any other capital gain income, said Dhruv Chopra, managing partner, Devan P. N. Chopra & Co. That's all in this video. Thank you for watching.